Okay, here's the pound Australian. Again, a lot of pound pairs sold off again after last week here. All right, so here's the 4 hour. Let me sort of just get a better zoom here. So again, I'm assuming you're looking at the 4 hour pin bar here. Is that correct, Connie? And I actually kind of want to get a better zoom here. It's a little hard to see with that big bar. Okay, so again, 4 hour pin bar here. You know, again, let's just start with the basics. So what's good about this? What's bad about this? So I'm assuming kind of you were sort of looking to trade this, and of course this is not my trade advice for you, but what were you thinking when you saw this bar? And again, if others want to jump in too, let's just do it that way. Okay, so it's out by itself, Riff. So do you mean it's at a nice swing low? Is that what you mean? Okay, so no confluence, right? So let's go to the daily, the weekly. You know, not nothing here, right? There's literally nothing. So yeah, we got to flip down here a little bit. But overall, if we're looking at the 4 hour here, there's not a whole lot here, right? Okay, so you wrote divergence plus 1 hour trend line. So okay, let's break that down a little bit here so it doesn't get too confusing. So are you saying there's divergence on this time frame, the 4 hour, or you're saying there's divergence on the hourly? Okay, both 4 hour and daily. So okay, if we look at the daily, there's no divergence here for me, right? Because we've only put in one swing point where price has bounced. We're now underneath that area. If price starts to bounce back higher above this swing point, I would say we're putting in divergence. If we look at the 4 hour, it's sort of the same thing, right? Here's that same bounce, right? And we're going to come back to this area. Can you guys hear me? Am I back here? Yeah, that's what I mean. I think my internet might go in and out a little bit. So um, as long as you guys can hear. Okay, so there's not really divergence here, right, Connie? So again, we have our first bounce here, and now price is underneath that swing low, right? But we're not bouncing, right? So until price starts to really put a swing in here, I'm not going to really know if there's divergence here, right? So that's too soon for me to say divergence. So again, you're just stuck with this tiny pin bar to swing low. If we move to the hourly, again, same thing. Here's a bounce. Here's a very small bounce. Here's a very small bounce. This is not strong divergence. Strong divergence would be here's a bounce, and now we're underneath that area again, right? You're getting committed swing points put in. These are very vague bounces here. So I would be very, very careful buying this pin bar. And again, look at the last support and resistance. This is really where I would want to be trading buys above, if we can get above this area. And again, that doesn't mean this won't break. So you said there's an hourly trend line. Again, you know, I wouldn't really start to use anything. Here's sort of the break. You know, it's. I'm not going to say it can't go higher here. You know, it certainly is trying to show a bottom, but this is very hard for me to decipher what really is going on in this market until, again, this is the area I would focus on, right? Because this is the clear last major swing point. What happens over here? What do we call this over here? Right, that's the localization here. So these are the most important points. Again, I'm not really worried about missing, let's say, a move higher there, which it very well could. So again, when you see a pin bar to swing low, it could be a reversal. But to me, it's a little bit too much bottom picking here because we just don't have quite enough information. You know, we're just sort of hanging out around here. So the best thing here would be for price to move higher, give us a little bounce here, reconfirm where the resistance is off of this price pivot zone, and then when you close back above that area, that's the area that's going to most likely hold the support, right? Or for example, let's say we get this, right? Let's say price comes up, bounces, and then we get a bullish outside bar. Well, now we can buy that bullish outside bar. So I just think that these types of trades here, again, it very well could take off here. You know, we could retrace to this bar low here. You know, this could be the new support. Price moves higher, hits this major area here, right? But these are very difficult trades because they're all over your charts. You're going to see these all over the place here. Now, Connie, maybe if this bar looked something like this, right? I mean, this thing's just been doing basically now. Maybe we get a much bigger pin bar that looks like that. We can say, okay, that could be a true reversal here, right? But this is your key area on this chart. This is really where you want to watch here, and it looks like it's the 1.7. All right, so it's just about the one. And look, it's not really. It's close to it. We could say that's part of the zone, but look at you right under that 1.7 big round number. We'd be trading back into that, last flip here. You know, as a trader, this is what you want to look for here, because this is where you're going to see who's in control of this market. So until we get above that area, I would not want to be the buyer into that area. Does that make sense? Okay, so let me see. Jim said, I find if I take a trade like that, I get stopped out below the pin and then price turns around. Absolutely. These are great areas for, you know, sort of a, let me call it a battle between, you know, the smart and the not so smart, right? Because here you get this bounce, right? So you shake out weak sellers, and what happens? People start buying in here. Price hits this area, whatever, turns around, stops out those weak buyers, and then turns around. So you just have not, you don't have a lot here to hold you up, right? You just don't have a lot. What is really protecting your trade, right? So don't think about the pin bar. You know, that's what a lot of people get hung up on is the pin bar or the outside bar. Those are really sort of, they don't mean a whole lot by themselves. It's where that location is here. So, you know, I always want to start, if I'm going to take a big trade anywhere, you just want to make sure you got one of these areas to your back. The same thing would be said for this bullish outside bar. Would we be a buyer on that, excuse me, not quite a bullish outside bar, but let's say that even was a bullish outside bar. Would we be a buyer here on that bullish outside bar? Sorry, guys, my dog hears them working. So why wouldn't, let's say that was a bullish outside bar here, right? Let's say it closed a little bit higher. I know it's a little hard to see because it's a little bit, there we go. Let's look at that. So would we be a buyer? Let's say this was a bullish outside bar here and it closed somewhere over here. Why would we not want to be a buyer there as well? That's another tricky concept that people, again, I have to say it all the time. It doesn't mean that can't go higher. But a lot of people will say, well, here's your support, here's your support, here's your bullish outside bar off that area. Let's buy. And again, I don't want you guys to get confused that you can't buy there. Right, so Warbuff said price might retrace before moving up. Again, what is the most critical area on this chart? Support, support, right? So buying up here becomes more difficult. Now, if we visualize, let's say, a close somewhere over here and maybe it had a high over here, here's the most recent price pivot zone. Support, resistance. We'd be trading right into that last flip there. That seems insignificant, but it's not. It's really not, because again, this is your most critical area, and now you're trading into the most recent critical area. You don't want to do that. So you want to be trading around this area if possible, right? And again, it doesn't always work that way. So if I see a bar like this, and you know, let's say we get a bullish outside bar that closes weak here, it could easily, you know, retrace down here and then take off. And I might just not be able to get in. But again, that comes back to risk, right? How can we control our risk? Versus, for example, now, look at these areas here. And mark them on your charts, guys. Don't take my word for it. Just watch them yourself. Support, 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 breaks down, turns into resistance. Watch the next time that we can confirm where this support and resistance is. So let's say this pin bar does take us higher. Very well could. Right? We might retrace down to this low down here, right? We might see price pull back down here, turn around, maybe bounce at the 1.7, come back here, turn into resistance. Watch where that resistance point is, where there's a high put in there. That confirms where your flip is. That confirms, think of it as sort of the battle line, right? Now watch the next time that price can close above that most recent high. Let's say that's the high, and let's say that's a close. That will then be the area that price wants to hold as support and move us to the next area, which would be here. Again, watch the same concept over here at this top area. Watch for a high to be put in to confirm where the resistance is, and watch the next time price closes above that high. That's your next support zone. Same thing here. Watch if there's a high. And again, you don't always get those highs and those confirmation and those localizations at every single area. There are plenty of times where price is just going to clear right through it and then maybe pull back and do it on the flip side. But that's the most effective way to use support and resistance, in my opinion, and to really understand where it is. Again, I explain the same concept when we talk about breakouts, right? And we have resistance, and I say, okay, we want a confirmation of that trend line, that resistance here, a little bounce. Then when price can close above it, right? And if we have an additional confluence of, say, a bullish outside bar, right? Well, then that is a great short-term support and resistance area, confirmed in confluence with the larger support and resistance of the breakout. The same concept is applicable with side-to-side support and resistance, right? So that's why I was telling Connie to look towards this area, because we have a whole lot more information versus here we're sort of trying to pick a bottom in many ways. And it could end up being one, right? We could dive into this on a lower time frame and start to see maybe more appealing features of it, right? So even I'm going to go all the way down to even to a 5 minute. Again, similar over here, right? Look at support. And again, I'm on a 5 minute, but the concepts don't matter. They're the same on all time frames. Support flips to resistance, resistance. So now we haven't been back to that resistance in a while, right? So look this is what happens even to some people. They start seeing this close here or this close here, and they're like, oh, okay, we're above this support and resistance. Let me buy here. Then a weak buyer is here. Price bounces. Now, the new true area to buy is actually above this high, in my opinion, right? And look at where the last high was, right on there. So now a more confirming long for me is going to be the next time price can close above these couple highs. That's the top boundary of this larger price pivot zone, right? So that's how I understand where a price pivot zone is and where that actual flip is based on that localization concept. You know, again, I just call it localization. I'm sure other people just call it a bounce or whatever, but that to me is what's going to tell you who's in control. So this very well could go higher. And here's your 4-hour pin bar, right? That's your pin bar. So now again, right now, sellers are in control, in my opinion. Forget about the pin bar. The sellers are in control as long as this top area holds. So the question is, are we going to pull back down to this last support flip here, right? And then that could be the area that buyers want to come in. And that's a better price to come in at, which was near that last low, right? So whoever put in these buys here for whatever reason was able to hold it up. A good buyer really wants to be around an area like that because, again, you're using protection. The protection here is the significant buying that came in here at this last little support area, right? So I'd rather be a buyer down here, you know, somewhere in here, maybe near these highs over here, right? And try to catch that pin bar on a retrace. Or I would want to be a buyer when price can close above this significant area. So do you guys understand that concept? I mean, that's sort of trading in a nutshell almost. And we're just trying to bring in other pieces of information into that, as opposed to just, you know, I don't like to just mark any support and resistance flip and just wait for a close above it. You know, it's still much better than almost 99% of the stuff out there. But I think if you add in a little bit extra, bits of confluence to it, such as, you know, an outside bar or here's a round number or a trend line or, here's boxing on a bigger time, it just sort of gives you even a better shot at a better trade there. All right, so let me see. Okay, Matt said you also broke support up there and price will move in waves. That bullish outside bar is a sign of a retracement before a further move lower. Right, so what Matt was just explaining, I'm a little bit behind here, is that this is just, you know, it's logical for buyers to come in here, right? That's the last major buying, but it's just a bounce, right? So again, there's that localization concept. So I don't want to be a seller, likewise here or here. I want to be a seller really when price can close under that area, like here. and then look where it pulls back to, right? So that is your new resistance line right there. So again, it's just that's just all you need to do. Okay, Mark said we always want clear price pivot zone areas to protect our trade. Otherwise, money management is hard. Exactly. So that's the concept that I was explaining here. If this was a bullish outside bar, right? Let's say the high was here and the close is where it was. Very hard to trade. Where do you cut out? What do you do? Now, again, you can use some short-term support, which is here, right? And be a buyer in there. You know, maybe get to break even as it breaks here. So there's always ways to trade areas. Just like there's a way to trade this. The way to trade it is not to buy here or to buy here. It's to buy down here if you want to play it. Or, again, as we dug into on that lower time frame, if price can close above the short-term flip. That is the way to do it. So really, I never want to be like, oh, don't take this trade because I don't like it, and focus on this area. If you're going to take this trade, just play it the smart way. And in my opinion, the smart way to play it would not be to buy outright here. Not that Connie said that or anything anyway, but I'm just trying to explain that, you know, I would want to understand this area better. And if I'm going to play it from a 4-hour perspective, the only thing I can understand is that's the better support area, right? Otherwise, okay, if I'm going to really break this thing down and get a little crazy with it, then I'm going to break it down based on this. And I want price to close above these highs to understand that I have this area to my back, right? So price closes above these highs, it shouldn't have to pull much further back beyond this area. I'm not going to play it like this, for example, which a lot of people do, and this is where they get in trouble, is they buy a break, right? Price hits that 1.7, and then it turns around, and they get shaken out somewhere in here, and then it pulls up, right? Or, as Jim was saying, this area holds, right? He buys in here, or, you know, used to. What does price do? It comes down here, shakes out those buyers, and then maybe it turns around, right? Because you want to be playing near the most important critical areas of a trade. And that all has to do with mapping out your support and resistance, those critical areas, and trade around those. You will see a better success just by doing that. Because, again, as Mark said, is you're just going to be able to manage those trades more effective. Because you're going to say, all right, this area didn't hold, I'm out. And you will see that in the large majority of what I teach is that concept. And again, I repeat it every week and on the forums, called dynamic risk reward, and it's all based around what we just spoke about here. But there are times when you take trades where you don't really have as dynamic of an area, but it still might be worth being in a trade. So all I do in those situations, if I still believe a trade is worth being in, is cut my risk way down, because I know from the start I'm not going to be able to limit my risk as much. But I still believe it's a good area to be in, so I just cut my risk way down and let the trade play out until